Hey everybody, Rob Travels with Dottie here, and a little bit deeper dive into insurance for us retirees, nomads. Just upfront, not an insurance expert, but I have a finance background, so a lot of this has been some very basic number crunching. And I've looked at this, my inquiry and curiosity started with just a few months ago. I was thinking about, well, I need to do a will. My nephew's going to be the executor, and it'd be nice if he had above who knows what I'm going to have when I die, and I plan on at least 20 more years. So for planning purposes, I'm 65. I'm planning to live to 85. If I live beyond that, great. But for planning purposes, 20 years. So I think after 20 years, how much am I going to have? Might it be whittled down? Would a life insurance policy make sense? Because you see all those ads for $8 a month, get a $50,000 policy, all that stuff. I said, well, let's call my insurance agent and find out the truth. And he gave me a very surprising number that was not like the advertisements were. He gave me more than one quote. And for these purposes, what I'll tell you, I'm going to use the lower quote. Then recently pet insurance came up, and I started looking into pet insurance. And then if you've been watching me, a big thing came up with dental. So I've been really diving into dental. So when I got back the quote, we'll start with the life insurance right here. And the life insurance, I got back a quote, and the lowest quote was $960 a year for $25,000. Thought, okay, well, let's run the numbers and see if I put $960 a month. A year, excuse me, it was a year into just one of those online savings accounts that pay about 5%. And that's a pretty good bet I'll get something very close to that, plus or minus over 20 years. And it turns out if I died at 85, that account would have $31,000 in it versus the $25,000 policy I was buying. So it made zero sense. I can do better just investing the money myself. And if I live longer, heck, it's more money. If I live shorter, it might be less than the 25,000, but I'll be gone anyway. But like I said, for planning purposes, we're going to plan on 20 more years. So I wrote back if I put that money in real investments, like I probably would, it's more like 9%. So, the number is going to be considerably more like $40,000. If I do not super aggressive, but more aggressive investing, and I would hit that $25,000 sort of break even point a lot earlier. I didn't do all those calculations. Sorry. So I didn't get that policy. Pet stuff. Now, pet stuff, pet insurance policies, I use the high end of the premiums here, and the premiums are variable. They start at like $400 a year when you're a puppy, and by the time you're 15, it's $2,000 a year. So it goes up about $50 a year. And we will assume statistically the life of your beloved pup is 15 years. So if I didn't get pet insurance and I put away that premium every year, I would end up with $18,880 after 15 years. Now, that's what we're talking about is self-insurance, right? So the risk you take is that I have disasters that cost far more than $18,000. That would be a lot. I mean, my history with dogs is I haven't had major expenses for my knock on wood, or good luck for Dottie. Dottie has had basically nothing. In my two dogs before that, it was just routine stuff. So the risk you take is, you're going to have to spend that whole $18,000 on healthcare for your dog. And keep in mind those pet care things don't usually pay for really basic services, and they have deductibles and the rules around it, but they can certainly pay off if you have, like, you're battling cancer at age 8 with your beloved pet. That it can make a big difference. But just keep in mind that if you take that money and and your pet goes through their life with, usually when pets die, it isn't something that you're battling, throwing a lot of money at. Usually it's that, they're 14, 15 years old. With my last two, it was severe arthritis, and their quality of life was so bad, and medications and things weren't helping, that it was time for them to go. So that's what happens most of the time. And if you had a pet policy, you would have nothing at the end. If you were doing the self-insurance, you'd have, $18,000. And if that's at 5%, if you were more aggressive, we're talking probably more like close to $30,000 in your pocket. So consider that. And by putting that, by self-insuring, by taking money and putting it in a separate investment account, you are, even if you have sort of disaster happen, you have that money, and it's you don't have to dig into your current living, your current living budget. So that brings us to dental. So I used actual numbers from a New Mexico Delta dental plan. The highest paying one that they had was $53 a month. And all these premiums I'm assuming are gonna be not gonna edge up over time, which they will, but I didn't put anything in there. So I've figured $53 a month for 20 years. Those rates are gonna go up. You just know it. But conservative, right? At the end, in 20 years, I will have amassed about $21,000. And that doesn't sound like a lot over 20 years for dental, but when you consider that even this, let me tell you that this dental program here, preventative care, which is cleanings, exams, topical fluoride, sealants, and all X-rays, you don't really pay anything. So that's pretty good. They're paying for that. Basic services, fillings, periodontal maintenance, and simple extractions, year one, and I believe you're waiting a full year before you can do these, or maybe it's major services. I'm not sure, but over 20 years, it's not really material. It's graduated. You pay 60% year one, 40% year two, and then year three and beyond 20%. So essentially, you're paying 20% of the cost of that. Major services, the slide for the first 3 years is 70, 60, 50, which essentially means you're paying 50% of the cost of those major services. And those include scaling, root planing, periodontal surgery, root canals, crowns, dentures, bridges, implants, and oral surgery. And I am sure this basic thing isn't going to give you the grinding, the details, but they're going to be limitations and maximums on those things. I don't think they're going to pay for 20 implants, and I think there are limitations there. So this one's for me, because I'm getting so much done, so much of my dental done in Algodones, Mexico, which have deeply discounted rates. $21,000 over 20 years is probably not a bad idea for me. When I consider, the real stuff that hurts are those. Oh, I'm sorry. There are annual maximums here. So annual maximum after 3 years is $2,000. So if you get an implant in the U.S., and I'm sorry I glossed over this. My bad. An implant can be $7,000 plus, which means they're only going to cover, half of their maximum $1,000. So implants are going to cost you $6,000. All right. So you can, on some of these major services, you can run out of annual max really quickly. So even just having two root canals and a crown in a year, and you're going to want to space it out and do one crown this year, one crown the next year, maybe. You really need to consider that because, just looking and saying, hey, all these major services, including implants, are paid at 50%. Well, if there's an annual maximum of $2,000, you're going to be severely limited there. So that self-insurance, putting that $20,000 away over 20 years makes a lot of sense to me. Okay, last part, I want to talk about Medicare, but in a little bit different context. I want to know, is Medicare, in particular, the Medicare that I've chosen to have, is it better or worse than if I had not paid anything into Medicare and there was an option, which there is not this option, but theoretically the option to say, hey, when I turn 65 and leave my job, I'm going to pay private pay. I'm going to pay the private sector for insurance that's equivalent. So the question is Medicare a good deal? Let's find out. So my Medicare costs are the base premium for everybody starting in 2026 is $206 a month. I have a Plan G, which covers basically everything that the base plan doesn't cover, is on $159 a month. And then for medications, I'm paying $83 a month. It's on the high end because I have one med that is particularly expensive. So everything that we do here is assuming I'm going to kick the bucket in 20 years, 85. So my out-of-pocket for 20 years is $107,000. My historical contribution that was required by law when I was working was $116,000, both me and my employers. Grand total lifetime cost for the Medicare path was $223,000. Numbers add up fast, don't they? It gives me full U.S. major medical coverage, hospital, doctors, drug plan with almost no underwriting risk or loss of insurability. So I'm guaranteed, right? Private pay equivalent. So if I went into the private market, broad nationwide access, minimal deductible, which would be $300 or in or outpatient, out-of-pocket max, about $2,000, because for medications, and that's equivalent to my policy. There's a deductible for that. The Plan G doesn't take care of the medications. That's a separate thing. So we laid out by my age band, 65 to 69, 70, 74, what those premiums are going to do, because they're going to be age adjusted for the private pay. Now they can be age adjusted too for the Plan G, but I have what they call community pricing. So it doesn't account for my age. It just raises it for, basically the average age in the community that I'm in. Community-based pricing is called. It's a little bit more expensive up front, but it doesn't increase the way this private one would. So I start at 60 to 65 at $14,400 per year. And by the time I'm 85, I'm up to $26,000 a year. So we average those, and it's over 20 years. It's $384,000, not counting inflation. So we're conservative here. But the Medicare stuff doesn't count inflation either. So we're even. The conclusion is that lifetime, including payroll taxes, for me was 220. Remember back from there, 223,520. And for private pay, you ready for this? $384,000, right? And that's obviously no prior contributions because that wouldn't. But let's compare. Medicare, guaranteed acceptance, stable, private pay, premiums rise steeply with age, underwriting may limit options, and the drug coverage is included in my Plan D. And for private pay, it's usually you need to go a separate, above and beyond with a separate policy, or there's a higher tier cost. And out-of-pocket predictability is very rated high, the highest on Medicare. And out-of-pocket predictability is low to medium. It depends on the specific plan design and inflation. So the answer is yes. Even including my lifetime $116,000 of payroll contributions, Medicare costs roughly, ready for this, 40% less, 40% less than equivalent private coverage. So anyway, I think we have that answer to the question, and just the peace of mind that what did I just read there on the analysis is out-of-pocket predictability. This is what means so much to me. On Medicare, it's high, very stable. And on private pay, low to medium, depends on plan design and inflation. In other words, I can't really predict with anywhere near the kind of certainty with a private pay insurance company versus Medicare. And if they don't like what they're paying out for you, guess what? They get to cancel your policy. At the end of the policy term, they can decide either to jack your rates way up or to just say they don't want to renew you at all. Medicare can't do that. So think about an insurance company. If you have, a battle with a major disease and it's in the hundreds of thousands of dollars of payouts, after that's over, they may decide we're done, no more, or your rates are going to go up. I know there's people are going to say, hey, no, there's in my state, you can't do that kind of thing. They're subject to a lot of state regulation. But trust me, there's a lot that private companies can do that Medicare, the government, can't do. So it's a good deal. And I'm glad you stuck around. This isn't like maybe as exciting as RV equipment and stuff, but insurance is important to really think about. And I make a policy. Here's my YouTube policy. I do videos about stuff that I'm very interested in and I'm excited about. And believe it or not, I'm very interested in all this insurance stuff and the calculations and what's good and what's bad. I find it fascinating. And I think it's, I didn't find it fascinating until I got older and retired, where when it didn't matter, I wasn't as interested. It matters so much now that I'm interested. And I bet many of you are too. Take care, and I'll see you in the next one.